Krisha, thank you for taking time being with us today. Tell us a little bit more regarding yourself and your background.
Sure. Well, essentially, I run the Family Office Club, and we represent 22 families that are worth $100 million each, helping them start their family office, formalize it, but also get access to deal flow. A lot of these families want to be doing direct investments instead of going into blind pool investment fund managers only. So they want to connect with each other and just get better and better access to direct investments.
And at this time, what do you look for when people present you deals? What are you looking for at this time?
Really, the best way to describe it is I'm looking for anomalies. You know, the families I work with don't really value things that are average or just a little bit better than average, or maybe it's an innovative model, but they have no track record and no assets under management, or the returns aren't very good. We're really looking for the thing that has great returns, a great team, highly credible, and maybe really a lean fee structure or performance-based fee structure. And you know, this morning at breakfast, I met with a $1 billion plus family office out of Brazil. Is one of my neighbors here in Key Biscayne, and this whole year I've been keeping in touch with him, and there's only been 2 deals out of the probably 2,500 that we've seen in the real estate space that really I thought were kind of anomaly deals. And he agreed one was an operating business, one's a commercial real estate investment firm, like a co-investment firm basically. And it really does take, I think, that much deal flow to find those that really stand out. And I think that's the value families are looking for, because anybody can get deals, but getting a deal that fits all of the 20 things, qualify, and then have something that's kind of amazing about it is the hard part.
At this time, we, as you know, this show is basically focused on real estate. At this time, cap rates are getting a little bit compressed, and so prices on properties that we get from brokers and the usual people getting a little bit overpriced now. So, what are your thoughts on this? Every time that you're seeing real estate as a market overall?
Sure. There's 3 things. One is going on the debt side. Sometimes can get you a consistent return, and then you don't have that equity risk of maybe overpaying for something too much. Another thing is going to where other people are not. So going into ugly assets or, you know, 2nd, 3rd tier cities is kind of like a go-to, you know, strategy that's not, you know, a big surprise to anyone listening probably. But also looking at things which make a property more efficient. I have some equity in a company, and I'm on the board of a company that essentially allows apartment building owners to save on average 30% on their natural gas and electrical usage. So as a hotel owner, senior living, office park, or apartment building owner, you know, the lower cap rates get, the more of a return you get by any boost in NOI. So, you know, the math we always do is like, well, if we can save someone even just $2,000 a month, that'd be $24,000 a year at a 5% cap rate. It's $480,000 of equity value potentially created from saving the $2,000 a month. So you can imagine if you could save $10,000, $20,000 a month, it'd be a lot more. So I think there's, you know, the advantage to low cap rates is that if you have ways to boost NOI, then you're highly rewarded for that. So it's not always a bad thing. You just have to watch out for obviously interest rates and, you know, what type of debt you put on properties, et cetera.
But if people were to present you deals, what type of typical returns that you expect to get from deals or at this time now? So cash on cash, kind of IRRs. Can you talk a little bit more regarding that?
Sure. Some of my families demand, you know, 15 to 20%. If it's non-development, they might be okay with high double digit, you know, high teens, but they'd really like to see something at 20 or higher. If it's development, they're almost always looking to be targeting 20% or higher. You know, for a very conservative investment, it's an institutional grade, multifamily property with 500 plus doors, et cetera. You know, people are usually looking more at like 8 to 10 or 8 to 12. But it just depends on, you know, what level of quality that property is at. But I'd say most stuff is in between. Most families out there are looking for, you know, 12 to 15%, and then hopefully a few of them get to 20 or a little bit past 20. But But, the return expectations are different. The family's from Hong Kong and they're used to real estate prices going up every year over and over again. And they're different if the family made their wealth in real estate development and they're used to getting a 24% IRR every year themselves. So, you got to get to know the family and see what their expectations are for sure.
But do you have demand at this time from the people that you run? Do you have demand now for real estate, or are they start to shift towards a different type of asset class?
Yeah, for sure. I think that real estate is usually 25% of all of my clients' portfolios. And I would say that it always will be a significant percentage. I'd say that right now, because of where the markets are at, especially in the US and big cities, that a lot of the families are cautious buyers, or they might be selling some assets where they're just getting offers coming at them. They feel like they should take some money off the table that already repositioned something, but then they'll go into something new potentially if it really fits, a new strategy they have, or it's in one of those like second, third tier cities, or they're able to use either a debt facility or a unique property management or NOI boosting area to improve it. So I think that's what family offices are most well known for in terms of growing their wealth, is having a strategy for like a business model template for approaching real estate that allows them to continually get into an asset, reposition, improve NOI, exit the asset, even if meanwhile everyone's complaining that everything's too expensive. Everybody's been complaining about that for the last 18 months or 2 years here, and families have entered and exited properties in that time and made money. So, I think that it makes a family sleep better at night if they have a strategy that can be patient and can be very long term. So if markets go down, they can just hold or maybe buy even more. But also if they have a business plan where things are flat, or even if they go down a little bit, the alpha that they're adding is so great that the markets go down 15% and they might still make 3 to 5%. It might be like the worst case, hopefully they break even or they have to be patient. So I think that's pretty key. If you just go out there spreading money around to fund managers and deals and crossing your fingers, it's inexpensive education, and hopefully you dial it into a consistent way to make money. But, I think you have to be careful doing that with all of the different offerings out there that are chasing family offices,
Sure. Investing with someone equates essentially to trust. You have to trust someone that is going to do right by you and going to say exactly what they say they're going to do. Having said that, regarding your personal background, how did you get into this specific niche? Tell us a little bit more regarding your story and how did you get into this specific family office type of business?
Sure. Well, I was just doing risk consulting at the beginning, and then I started working in the capital markets, representing like fund to funds and portfolio managers, and they were trying to reach out to wealth management firms to raise capital. And so while doing that, I realized there was a group of wealth management firms out there called family offices, and while meeting with them, I realized a lot of them were not speaking to each other. They didn't really know where the industry was going or how many family offices were out there. And especially the non-family offices I spoke with knew just about nothing about the industry. So as I started to meet with more and more family offices, I just shared online what I was learning along the way. And eventually, people started coming to the website where I was sharing that information. We bought familyoffices.com, or I bought it. And then I started speaking at events, and I eventually have met with, 300 family offices in person. And maybe globally, there's only 500 people that had done that, and none of the other 500 people were sharing information online as actively as I was. And so we became kind of like a hub for resources. And then, that turned into meeting over 1,000 family offices face to face in, 14 different countries. And it all evolved from there. But at the beginning, it was really just me trying to learn as much as I could to serve them better. And then it very quickly on accident turned into them wanting to get connections through me, deal flow through me, advice, etc. So it wasn't all pre-thought out, but there's just a big gap in the market, 10 years ago when I got started in it.
Because at this time, if you actually Google family offices, you pretty much will get your name on it. So that's pretty remarkable, because it seems like it's focused and you remain focused on this idea that you had. But what the value that we can provide to entrepreneurs listening is that the early stage, and that's what I wanted to focus a little bit on now. That's where we can provide the most value, because it's not easy. It's not easy people to trust you, and then you developing the image that the go-to guy regarding family offices. I'd like to dig in a little bit on that, if you don't mind.
Yeah, sure. I mean, one thing that's critical is to find some way that you can make enough money early on while being a helpful counterparty. Lots of people are so busy running their business, they don't take time to write a book or to give speeches or to write articles. So if you can either take the time to do that while monetizing, your skills in some other way, that's one way to get started, or have that be a natural part of your business model. For me, it was a way to build an email list that I could then sell, conference tickets or books or training programs to. So for me, it was about developing a business around the industry of family offices and around a relationship, and not defining myself as a conference business or as a consulting business. I think that's a mistake a lot of people make, is defining themselves based on like one product they're delivering instead of on a relationship or an industry. So I think that was one advantage I had, is just that different perspective. And then, I think one big trick of it all in any business is making sure that whatever business you start, the circle that you draw in the sand that you're going to try to occupy as a business person with your brand has to be so valuable that you're, motivated to work as long as it takes, many hours a day to occupy that territory and monetize it. Because if it's not valuable enough territory, you'll give up before it's monetized. So I always had the attitude that, like, I don't care how long it takes. If I can be, a top 5, resource provider on family offices globally, I know some good things are going to happen. I don't know what's going to happen, but, not bad things, So for me, I was like, I don't care how long it takes. I'm just going to write multiple books on the industry and interview a few hundred people and fly all around speaking and, work, a ton of hours. And, I still work really hard at it because, after 10 years, we definitely have a recognized brand now. And we've got about 20 people on the team, but I think we could be doing $100 million a year, and we're not yet. So, I think that there's always another level to kind of get to in building your processes and everything. But at the beginning, I think if you don't choose the right niche and if you don't have high conviction in what you're trying to get to long term, then you'll kind of like waver all over the place, and you might not work super hard consistently at it, and someone else is going to eat your lunch, or you don't even know what lunch you're trying to eat. And I think that's like a big problem a lot of the time.
But that's kind of a catch-22, because all of us are entrepreneurs, and you kind of go through the darkness for a little bit. And when you usually hear someone that is super successful, they kind of make it look easy. But all of us, we know it's not easy, because it takes a long time to build a brand, to people trusting you for that exact same niche. So that brings a lot of value here. So for people listening, I just wanted to hit the nail in the head here. Everything that you can do in order to develop a brand and to be the go-to guy in that specific niche, being writing books and driving yourself pure out of passion, that's a pretty much a safe bet. Would you agree?
Yeah, I would agree. And in my case, I've definitely had the experience of trying a few different business models and seeing what takes. At one point we were selling advertising on the website to service providers, and we're bringing in $8,000-9,000 a month doing that. We then launched a training program in the hedge fund space and the family office space. We're able to bring in a couple $100,000 a year doing that. We started focusing more on the training programs and soon investor databases. And the advertising I started to ignore a little bit because it had stayed at like $10,000 a month. Well, meanwhile, the training and the data got me to $500,000 in revenue. And then we got into hosting events and doing more advisory, consulting, retainer agreements. And now, the conference business brings in a few $1 million a year, and some of the other businesses strategically are helpful. So for me, I've tried some business models that didn't take off, and I've tried others that in the first year trying it brought in, $100,000 plus. So I also think part of it is experimenting enough and being able to support yourself, but always having the core bread and butter ways of making money. You might have 1 or 2 business model experiments going on at a time, and if they don't take, then maybe you just need to keep on tweaking them, or maybe it's a horrible idea, or the market's not ready for it. But I think it's always a balancing act of needing to, pay the bills, and then always be experimenting on what could be that next level that you layer on top. So you're not abandoning what's paying the bills until one or two of those experiments is hit, and you can move that to your core and maybe just maintain the old thing you were doing to make money, or shut it off, or hire someone to run it. So in my business, I've got a head of conferences, a head of data, a head of training, and then the only thing I'm running is really the retainer advisory business with the families, and my team is running the other division. So that's how we have scaled things to date, and that's how I plan on scaling things in the future as we keep going forward.
Also, I wanted to ask you regarding the future. Where do you see the future of the business heading? Regarding we are having a increasing input regarding technology. Banks are getting a little bit on the older side. We looking a rise of fintech. I'd like to hear your thoughts on this one.
Sure. Yeah. I mean, the future of the family office space, I think it's going to be 10 times larger than it is now, because still people don't know what a family office is, and as they get more recognized, more people are going to want a family office, and more people will be seeking them out. So I think the industry is going to go through a huge growth phase here over the next 5 to 10 years. I think there'll be more virtual family offices being formed, many more single family offices that have clear websites on what they want to invest in, because they'll be fighting to get the best manufacturing deal flow, the best commercial real estate deal flow, et cetera. And if nobody knows what you want to be investing in, then they don't know to show you their deal. But if you're known to buy RV parks or commercial offices in, Michigan or Florida or Ukraine, and you're known for that, then you're probably going to get shown those deals first, and you could take them down first, or negotiate hardest, or have the most leverage, see the most strategic value. But if you hide under a rock, no one knows who you are, and you don't get that deal flow. So in the future, that's going to be a change. And then in terms of our business model, we're looking to just open more doorways that allow us to develop relationships with $100 million net worth families, like our family office executive search division has done that, and we're growing that up now. So we placed somebody with $1 billion plus family office earlier this year, and now it just gives us more permanent access there to have them speak at an event or show them deal flow. So the more doorways we can have into the family offices, the better, as long as it's aligned with our kind of platform strategy of being like a one-stop resource for people running and starting family offices. So that's really our vision. There's a lot of you talk about that for a long time before everybody, like the granularity behind that, but that's kind of where we're headed.
And regarding the past, if you had to go back, advice to your younger self, what would you say when we were struggling?
I think listening to the customers very closely and not banging my head against the wall. If something is not monetizing, it doesn't matter if it seems like it would be. There's a difference between something having the potential of making a lot of money and doing something because it sounds cool, or it'd be so cool to say you did this deal, or be able to brag about, like, oh, I'm a big time investment banker, or working on this huge thing. The bigger the project, if you don't have a lot of track record doing it, the more likely it is not to happen, and not to work, and not to close, and someone's going to say no. So working on smaller things to begin with to get traction, and just really following where the momentum of where the money is flowing for you, instead of where, oh, I've got this dream to be X or Y. If that's not connected to the harsh reality of how you can make money, and there's really low risk for you to hit singles and doubles, that can be a distraction. So, early on, I think I made some expensive mistakes there that probably cost me, hundreds of thousands of dollars. And I think people can get emotionally attached to one type of role in an industry instead of just seeing where the opportunity is and filling that,
And when you talk a lot about focus, and I think this is super important, because when you are developing experiences, you tend to kind of scatter all over the place. And it seems to me, if you want to be recognized for a brand, you actually have to believe in it so much that you have to be like super focused. It's like Richard Wilson, family offices, John something investments. Would you agree on this philosophy?
Right. Yeah, and I think the more niche focused you are, the easier it is to be known as the number one person in it. Like if you want to be known for the number one person for self-storage investment in the city of Austin, Texas, there's no one else competing for you for that, so, it might not matter. You could achieve that and maybe nothing that amazing happens for you, but you have to balance that with trying to be the number one expert on commercial real estate globally. That's like an almost impossible thing. So you have to choose the right level of specificity to what you want to be number one at. And I think that is pretty tricky to do. But I think it's important to think pretty deeply about that the goal is not too easy, but not impossible, to get to. But, at the very beginning, I didn't know if it was going to be family offices, hedge funds, or capital raising that I'd really focus on. And for a bit, I created content on all three. And I thought it was going to be hedge funds for a little bit. And then I found consistently that people were drawn to the family office words and articles and information more so than capital raising and more so than hedge funds. And then as I, thought about it long term, I realized like hedge funds could go out of favor and private equity could come on, or real estate is more hot of an area. But an investor base, everybody always needs access to. So in my case, out of those three options, everyone always needs to know how to raise capital. But, the investor base is where there's a lot of power held. So to interpret that for other people listening, they might be thinking locally how to get really well known for their area of expertise, like commercial real estate brokerage or investing in apartment buildings. And if they have a chance to choose between different areas to specialize in, they might do well by volunteering to lead a local investor club or a group that costs $10,000 or $20,000 a year to join. So by default, no one joins unless they themselves are making $200,000 a year or $500,000 a year. And having access to a consistent investor base that is predisposed to having some interest in what you're doing and being able to set that up for yourself, I think is a lesson you could take away from why we've done what we've done.
Cool. From what you have learned so far, what advice would you say for someone that is trying to raise capital for their first deal?
So I wrote a 100-page book on this exact question. I think a lot of people go about it a bit backwards. Yeah, and it's free. I'm not trying to make $3 off you if you buy it on Amazon. It's free on capitalraising.com. But essentially, my advice is to position yourself to attract investors instead of just cold calling and chasing them, and figure out how you can be a resource to them and genuinely helpful instead of just pitching them and just trying to pitch 500 people to hopefully close the 15. Instead, you should be attracting them to you or being in the midst of them constantly. That kind of summarizes the 100 pages that I wrote on that in that capital raising book. I'm happy to go into any parts of that you'd like me to, but I think that's pretty important.
Go ahead. Sure.
Yeah. So one example might be finding 5 to 7 different organizations in your local community that can help you in meeting new investors. So I used to live in Portland, Oregon, and besides taxes and weather being bad, there were no family offices there. So I moved to an island outside of Miami that's very expensive to live in. So if you can afford to live here, you're usually doing something in your career, or your dad did. And so, that has helped. Then I joined EO locally. I'm now joining a $20,000 a year coaching group that everyone in the group has a $500,000 a year profit in their business, or much, much higher. And then I have our family office clubs. My point is, if you look at what's around you and what your passions are, what your interests are, you should be able to find something, whether it's a yacht club or tennis club or golf club or Porsche driving club, alumni club, etc., and layer 5 to 7 of those on top of each other. So you're naturally just always bumping into people who you can define what you do in a single sentence that helps you position yourself as your name equals, ownership of some keyword space that you want to be referred to as. So when people think about self-storage investing, they think about John Smith, and you want that association. Then, when people are talking about, do you know anyone who has any great investment deal flow? I'd be like, yeah, well, John Smith does self-storage. Someone might say, hey, do you know anyone that does self-storage or multifamily? And, yeah, John Smith does, And so having that going for you is just one of the ideas I provide in the book. It seems to be, working very well for us. It just leads to referrals. And, one big problem is that most people we have these capital raising boot camps, and I go through about 150 slides of information on this topic, and people will hear that, and we'll be doing exercise worksheets throughout the day. And at the end of the day, I'll ask them, so what's your one-liner on what you do? And they'll say, oh, well, we do this, and we also do this, we do a little bit of that, and we might do that or this, depends on the property. And I said, well, if you can't summarize it in a sentence, there's no way anybody else on planet Earth is going to remember what you do, because it's just convoluted and dissipated. There's no energy to it. If you can't say it in just a couple words, you've lost everybody. They'll never keep you in mind for anything, because you're all over the place. It's soft, So, but if you can be known for, something very specific that's valuable to be working at, position yourself in, then that's where there's power in it, and that's where you can have your brand and your work publicly kind of sweating for you over and over again. You just have to build it one time, and then it just builds momentum on itself.
Gotcha. And also regarding other books, because I'm a bookworm, I read just about anything that I can get my hands on. What have you been reading lately that you'd like to share with our listeners?
I'm reading, right now I'm on Audible with the 12-Week Year, and I find that to be an excellent book. And it's about executing so that you can get done in 12 weeks what other people get done over a whole year. And it actually has some good ideas in there. And one part from that book talks about how if you commit to doing something for 12 weeks, it's not as hard as keeping it up for a whole year. But also that if you commit to something and then your daily actions are based on how you feel that day, and you base your actions on that, then you'll always be restarting and never meeting your goals. But if you base your actions based on your commitments, then you're going to execute more consistently. And it doesn't matter how you're feeling. You're going to be executing and making progress towards your goal consistently. So I still have a third of the book left, but that's been a great book. I think it's worth everybody taking a look at.
And also, finally, where can our listeners get a hold of you if they have any further questions?
My email is richard@familyoffices.com, and then the two websites that both have free books and videos and resources would just be familyoffices.com and then capitalraising.com.
Richard, it was wonderful having you with us today. Hope to speak with you soon.
Yeah, sure. Thanks for having me on here. Take care.